only mode.
Good evening, everyone. Welcome to Admiral Markets webinar of 19th of March 2014. Today we are going to talk about psychology, spiral of doom versus way to success. So basically the question is how you can manage your psychology along with your trading, with your money management and with your risk management. And prior to start a webinar, I have just received a message from Ravi Mutnu that he is running currently 133 pips on USD CAD following our weekly recap last Monday. Perfect setup. I'm very glad. Yeah, and also Lo told me, she said, hello T, thanks for USD CAD analysis. I will show you that here. Worked well for me. Yeah, also I'm very glad that it worked for you. Well, not just USD CAD, we had many other great setups. All of those setups worked well. Basically there was no losing trade, and I'm very glad for that. We will have, of course, new session recap on next Monday. So I guess this last section recap really yielded a huge amount of pips, and I'm really glad about it. I'm really glad that it really helps. So today, well, let's stick to our webinar today. You know that I already made some of the analysis for today. Basically, we didn't have a big pullback to our entry zones, but if you follow the Admiral Markets and blog and Forex Factory from this week, especially yesterday, you could have seen a nice USD Swissy trades which have been happening today and yesterday. So scalping of this POC1 a couple of times, 3-4 times, could have yielded really a great amount of pips. So I'm very glad that USD CAD and other trades worked well for you. Before we begin this important webinar, of course, risk disclosure statement. As always, risk disclosure stating all the risks associated with Forex market, and by proceeding further with me, you are accepting all the risks associated with Forex market. Okay, let me put it like this. Okay. Also, a standard risk disclaimer stating all the risks associated with Forex market, and I need to say that I'm the author of this webinar, and all this material serves as educational and informational purposes, and this Admiral Markets webinar is hosted on .com global website, and it is not hosted on .uk website, so it's globally used. So today, agenda, we can start now. Tripod of successful trading, beginner's luck, spiral of doom, change comes around, or success. All you probably know that you have come, when you started trading, you probably had switched from, I guess, winner to losing phase, and for some of you, that the losing phase probably lasts also today. Through this webinar, you will learn that you are not just, you have fate in your hands. So basically, you're not just trading the system or trading the market, but you are also effectively trading your psychology. As you know, I will always remember you that successful trading is based on three things: profitable strategy, risk management or money management, and psychology. Whoever tells you different lies. I say that is my opinion, and by years of full-time trading, I can say that really trading is about these three simple things. They're so simple, yet they can be very complicated, because basically the easiest thing is to learn the system, to learn the strategy. A little bit harder than learning the strategy is risk management. Because, we talked that last couple of times, and on our last webinar, if you remember, we talked about risk management. So it's not the same, the risk management is not the same for each system that you trade. If you trade scalping, then you need to know the rules for scalping. If you trade intraday methods, then you need to know about rules for that intraday methods. If you go with breakouts or with counter trends, you need to learn the rules for all of those things which are associated with your strategy. And who is responsible for that? Yes, you are responsible for that. But also I need to say that your mentor, or the guy or the person who sold you the system, is also very responsible to that strategy. So basically, all of those things needs to be put together in order to be profitable in Forex. If one of those legs falls, you notice that this tripod will crumble. So you won't be successful in Forex trading. Okay? Now you're asking me probably, how did I know that the dollar CAD will go 130 pips? And I'm really glad that you made 130 pips out of my analysis. That is why I make those session recaps along with Admiral Markets. They're really, you need also to thank Admiral Markets for those 3 pips, because if it not was for Admiral Markets, we would hardly have any of those 3 webinars. So, years of trading, but not just years of trading. I know that I have profitable strategy. I know that I know about risk management. That is why I'm so long, and I have been so long in this business. But also I know a bit about psychology. And when all of those things are put together, then you can make pips. I didn't make 130 pips as some of you did. I made less because I was stopped on trailing stop, because that is my method. But when I hear that many of you really made great number of pips of that session recap, well, I'm really glad that it's almost, I'm really happy as I also made it. It's basically the same feeling. The same feeling is for me. I share that feeling of success with you. And that is because I know that my psychology works out for you. That is why I tell you, try to watch the levels, put stops there, put targets there, because I know that psychology, I have succeeded in transferring my psychology to your mind, and that is also a great thing. But what if you're a wise trader and you don't follow those session recaps? You want to trade by yourself. You don't listen to any other. You're probably think about beginner's luck. Whichever business you start to do, or you want to let's say that you want to start a business, usually you will face with a stroke of beginner's luck. And if you read a famous book of Paulo Coelho called Alchemist, you will know what I'm talking about. Usually when we imagine and we wish for something to happen, the whole universe aligns, and the whole universe aligns for making our wish to happen. And it does happen. Sometimes, when you play poker, or if you play any other social game with expert of that game, you probably can win one or few times. Even though you're a beginner, sometimes you can win versus expert. But it's a pure hit of beginner's luck or lady luck. And I'm sure, because I have also witnessed it myself, that many traders face with an initial stroke of luck. And why is that so? It's because traders do not use stop losses, and traders trade randomly. They switch from system to system, or if they trade system, they need somehow, if you trade a system, you always want to change the rules of a system to make it to fit into your psychology, but it doesn't work that way. You need to talk to your mentor about the rules. You need to test it before you go live. Okay? And usually you will justify it by, okay, I had a couple of winning trades. Next 10 trades also will be winners. But that's not the same. Now I have a question, but I will be back to on the FOMC. Will US rocket upwards? Will dollar rocket upwards? We will see. So far, I haven't listened to Yellen testimony, and this will be about US dollar especially. But the crisis in the Ukraine, I'm not sure what will happen, but there is a strong possibility that if euro dollar doesn't break 39.85, it will fall. Okay, so pay attention to 39.85. Okay, now let's get back to webinars, and I will answer your question later. So usually there will be a string of lucky trades which traders may misplace for a proper trading. Then if you have, I don't know, a winning streak of 10 trades, you probably think that you are a god, that you may trade full time, and that you have mastered trading business because it's very easy. Usually we start trading with 1 or 2 pairs, euro, dollar, cable, I don't know, maybe 3 pairs. And then you will realize that after 1 or 2 months, you will suffer a margin call. That is a simple truth, because many of the traders and many of guys who I know to trade have suffered a margin call after 2 months trading, just because they don't use stops, they are over leveraging themselves, and also they've been sucked into a spiral of doom. Spiral of doom is a sort of vortex that can really suck you in if you don't know how to swim, how to fly in it. And usually on wise traders that will happen after 2 months time, and more stubborn ones will go to trade again, but also some of those who don't have the money to trade, unfortunately, they will stop trading. So basically, beginner's luck will fade away. It will follow you through a couple of months if you are really lucky, but then after it finishes, you will be trading by yourself, and probably you will be sucked into a vortex spiral of doom. I know that some traders also experience that in a couple of days. So usually you start to trade, and you have a nice winners, 10 pip, 5 pip winners, and then next stop is margin call because you didn't use your stop loss. As Paulo Coelho said, every surge begins with beginner's luck, and every surge ends with the victors being severely tested. And the boy remembered an old proverb from his country. It said that the darkest hour of the night came just before the dawn. If you're strong enough, and if you're stubborn, and if you dare to learn trading forex market, after that night you will step into the dawn. And that is also the very big truth. But that means that you need to avoid to be sucked into that spiral of doom and to think basically about trading as a full-time job. We will just go we will make a quick glance of hierarchy of needs, because that Maslow, that hierarchy of motives, he talked about it in his books, and basically it's all about, it starts from love and belonging. First two needs are basically the same needs which every single man on this world has. Breathing, food, water, shelter, clothing, sleep, they're all physiological needs. Safety and security, like health, employment, property, family, social stability, are at the second place. And if you want to trade, you will start from this: safety and love and belonging, friendship, family, intimacy, sense of connection. And you will go through this pyramid until self-actualization kicks in. And now I will guide you through that, because Maslow said that basically the largest layer of this hierarchy, the bottom layer, deals with our psychological needs, physiological needs: breathing, eating, sleeping, drinking, reproduction, homeostasis, and excretion. Many of these are instinctive and involuntary, and without them the subject would die. That is also the big truth about trading and about yourself. The second layer relates to safety and security, and its most basic form, we can think about it as a shelter and personal safety, but can also extend to financial security, employment, and the safety of the family. This relates directly to one of the interesting main warnings to forex traders. Guys, if you didn't manage to satisfy this need, or you don't have a job which can satisfy this need, if you want to trade fully, you will be in a sort of problem. If you want to trade full-time, you need also to have additional funds for maintaining your proper family life. That means if you want to trade full-time and live just from trading, you need to have a a huge amount of money on your account. But if you want to trade also, you can also have additional sources of income, be it a day job, be it other sort of things concerning trading, and you can use that money for your life. And let's say that you can use your money which you made from trading to your social stability. What does it mean? You know that in developed European countries, people are paying their health and pension insurance. That means that if you start, let's say, trading from the year of 30, and in next 35 you want to be a full-time trader, then in the year of 65 you need not just to have the money on your account that you made from trading, but you also needed to diversify your risk. So let's say you gave 5% to your health insurance. You made 30% of trading to your pension. Let's say that you also made health insurance to your family, and also you have deployed, I don't know, 10% in the bank. So that means that you just won't use your trading to pay bills. You will pay bills from another source of incomes, but you need to trade also, let's say, to buy I don't know, a new car, or maybe to buy a new computer, or it depends how much money you have. Or you maybe just want to save for your health insurance and for future pension. Who knows? And that means that you basically need to satisfy this secondary need in order to proceed further. Do not skip this step. This is very important. Financial security and the provision of shelter So reminds the trader not to risk all he has in trading. All Forex professionals regularly stress the importance of trading only with money you will not miss, and Maslow himself, through his hierarchy, directs the trader towards ensuring financial security before they consider seeking to reach into this team level. So you need to be financially safe before you come to this step, aspiring to attain that by trading Forex. As I say, if you make money with Forex, or if you have additional incomes, let's say you're making money with Forex, you have maybe your day job, or maybe you are a Forex mentor, or maybe you're an insurance agent, whatever, diversify your risk. Trade with a certain amount of money and use that money to buy your health insurance, use that money to safeguard your family, to put that in a safe place, let's say in your future pension, because who knows whether you will be able to trade if you reach, hopefully, 65 years. Who knows? I just don't want to think the worst. You know, today's life is full of stress, and people are really getting sick. Even you can see 20-year-olds and even younger to suffer from a cancer. I hope that it will really, that no one of you will get to that stage in your life, and that will be the most beautiful thing to you and to your family, to stay healthy. Because if you're not healthy enough, you just cannot work, you cannot function, you cannot trade Forex. So this is very, very important, guys. Do not risk more than you can afford. Think about safety and think about security of you and your family, your kids, your children. And then we come to the middle level, because it deals with the need to belong, friendship and family. The successful trader additionally will find that they need the support of other professionals, experts, and account executives to become comfortable as a part of trading community and trade confidently, to have ambitions to pass through the journey of Forex trader when trading a live Forex account. At this point, that bad emotions, damaging, can take over, such as fear of loss, greed, excessive profits, or overinflated egos. These by themselves or in combination with each other have the power to destroy what could have been a promising trading career. So real trading starts from here. Real trading starts from this point of this hierarchy of needs: love and belonging, friendship, family, intimacy, sense of connection. Because you have probably secured these first two layers of your motives. At a fourth level, we also begin to encounter positive needs and emotions that trading can engender. A rise in self-esteem through a successful pattern of trades, and with the rise in confidence as your skills develop, you will find yourself no longer glued to screens studying charts and indicators and drawing lines. You will sense real achievement where you are now using your profits for something tangible, a better life for yourself and family, or even being able to make the lives of others better through charitable donations. You'll be earning the respect of other traders, perhaps in a Forex-related forum, or in your job as a trader, where you can share your strategies and help others, and also learn to respect other traders who are as successful as you are. So until you have satisfied these three needs, you cannot fulfill this need. Only by fulfilling these three needs you will enjoy helping others, and basically you will raise a degree of self-esteem. Now, once you have achieved these upper levels consistently, and as Maslow recommends, master them, you're ready to move on the self-actualization level, where you can aspire to be amongst the best traders. You will be planning to ensure consistent profits. Your trading skills will be fully developed. And by self-actualization, you basically fulfilled all of those needs below, and basically you can call yourself probably a happy man. Now, the thing is, you will, until you fulfill this, the final stage, the peak of this pyramid, you will go through market cycle of emotions. This market cycle of emotions is very, very important because we have all been through it. So let's say that you're a beginner forex trader. You will be faced with probably tough psychologically testing. Euphoria will beat you as a novice trader. I can guarantee you. Because many of those beginners, they're extremely euphoric when it comes down to initial trading success. And usually when trading success comes, euphoria begin to overwhelm you, and then usually you will drop down to the level of fear because of the reasons I previously stated. You don't use stop loss, you don't know anything about forex, you didn't go on a demo account, you're a gambler, you're not a trader, you're revenge trading, you just don't know how to trade. And from starting euphoria, you will drop to fear, and when you drop here, you will be sucked into a spiral of doom. We will talk about this. You should be optimistic when you start to trade, or content and hopeful. We will call that point 7, because at this point you are content and you are basically start from the support. I can tell that. If you imagine this as a way of the chart, this is support, this is resistance. You know that when we are buying, we are basically go from the support towards resistance. And you see, we are going north, we are going long. And if you imagine this as a sort of chart, you can see that point 7, contentment, is the final support, basically, and it guards you from downward spiral. If you're sucked in, if this resistance breaks, well, usually without a retest, you will be sucked into downward spiral, and probably very fast you will come to this point, anger. And now, basically, you should be optimistic when you start to trade, or content and hopeful. So this is, just imagine this as a sort of chart. This is support, this is resistance. If you start trading at this point, you will have a much better psychology to your advance than if you started from here. Because it takes less steps to make it to this point. Because at this point you will probably be kicked back here again. But if you start here, you will have much more time to enjoy the trading than if you started here. Okay? Now, thanks, Darshan. He says, brilliant slides and diagrams. Bravo, Postania. Thank you very much, Darshan, for your. Let me show you the comment. Brilliant slides, and thanks, Darshan. Thanks a lot. Oh, sorry for this. I will get back to this fast. So think of this, always think of this as support and resistance levels, because when you trade a lot of time, when you trade full time, you will use those support and resistance levels for other things than trading. So this is support, this is resistance. You want to trade towards the resistance, from the support towards resistance. And when you come here, you will be kicked back. But then you need to find the power to go here again. If this support gets broken, you will collect those stops below and you will probably fall through this. We call that a slippage in trading. Because your stop loss would not be here. Believe me, it's not here. It's somewhere around there. Anger, discouragement, revenge. And probably the first stop will be revenge. Then you will be making revenge trading. and by that revenge trading, what will happen? You will become a victim. You will, that's for sure. So in this market cycle of emotions, basically you start with being content and optimistic to a euphoria. When you experience euphoria, you need to step back from trading. You need to step back from trading. Look at these points: hope, maybe I can recover; optimism, belief, thrill. What did I tell you? Who's the man? Margin up for early retirement. I am the God. And then what happens? Oh, another losing trade. It's just profit taking. These sellers will regret letting go. Anxiety. Maybe I should have margin. Denial. This is a good forex pair. How do I hide this from my wife? Panic. Capitulation. This is the final support. Look at this. This is also a slide of trading. Capitulation is the final support. You must not go into anger or depression because you buy at the support. You need to recover. Don't let go. Never back down, okay? From this support, you will be given another chance. But learn from those mistakes. Try to learn from those mistakes and try to learn from me, who actually suffered all of this at the beginning of the career. And now I'm talking also about my experience. I have went through all of this and I just know how to deal with it. And I'm always telling you guys, I trade full time. This is my career. If I trade $10,000 account, I will use 0.3 to 0.5 lots on a position with 30 pip stop loss. Okay? That is the simple truth, because by doing a proper money management and by having a proper method, my psychology also will be and is very, very calm. I have a peace of mind when trading because I have managed to have a successful trading method. That means strategy, a good and proper money management, and proper psychology. I don't make 20 or 30% per month, but I'm happy if I make anywhere from 2 to 10%. Or if the month is against me, I can allow for a loss, but I am more happy if I'm on break even. But I don't let this spiral, I don't let myself go from upward spiral to downward spiral. Because if it looks like a big wave, but usually the wave from the ultimate resistance to the ultimate support is very, very fast. So this usually is not daily chart or monthly chart. This can be a minute, 1 minute chart from the top of upward spiral to the very support of the downward spiral. Because when you come here, it's much, much harder, it's a lot harder to climb to this X support, now resistance, and to break successfully above it and to be sucked into upward spiral again. This way is a very unsecure and very long way to go. Okay? So don't let yourself be sucked into a downward spiral. Now, we went through all of this. You know what I was talking about. We can move on to basically another part of market cycle of emotions. When you start optimistic or content, it usually means that you have already accepted a potential loss. Why? Because you base your trades not on how much you will win or how much you're able to win, You base your entries on how much are you willing to lose. And when you start like this, optimistic, hopeful content, you just know that if you lose, you will lose 1.5%. So basically you're very optimistic. Even if you lose, you're still okay, you're still good. But if you start trading $10,000 account or $1,000, let's say $1,000 account with one lot or two lots, well, you will probably initially be very disappointed because that trade will probably go in a slide of drawdown. And maybe if your psychology is really that bad, you will come to hate the market in a couple of hours. Because losing $300 if your stop loss is 30 pips on 1,000 account is 30% of a loss, and your initial entry was not here, optimistic or hopeful or content. Your initial entry was around here. You were worried about your trade. And that is why I trade with 0.3 on 10,000 account, because every time I open the trade, it's 0.6 on 2,000 of 20,000 account. Because every time I open the trade, I start here, content, hopeful, and optimistic. If I traded 10,000 account with two lots each time, I would not start here, optimistic, hopeful, and content. I would start here, doubt, worry, somewhere around here I would start. Why? Because I am a little bit worried because my stop loss is 30 pips and I'm risking basically 6% in one single trade. In one single trade. Now pay attention to this. You didn't see this anywhere on the web. And I doubt that anyone will tell you the real truth, and I doubt that anyone will teach you and try to teach you the way I'm teaching you. It's easy to say, let's make money. It's easy to say, okay, Forex is a very good job. I will make 10,000 in the first couple of months. It's not the real truth. The truth is, the trading is how much are you willing to lose, unless you want to gamble. If you are a gamble, your every initial entry will be doubt, will be worry, will be blame, and if it goes in a slide drawdown, it will be anger. That means that you will suffer from depression, that you will be angry on your family, on your friends, and that ultimately it can lead to a premature death, to illness. Okay? Don't let the market or any job you do influence your life, your health. Be stronger. Start trading from this point. Use proper money management. Use proper risk management. Don't overtrade. Don't go revenge on the market. Okay? When you start to win, try to be less euphoric. We talked about euphoria. Don't be euphoric, because of that euphoria you will lose. That is 100% true. That is market cycle of emotions. I didn't invent it. I didn't invent it. This is a widespread truth, because people who work on this theory have backed it up with tons of evidence. When you start to win, try to be less euphoric about winning, as that will lead you to close your position too early, unless you're scalping or using a trailing stop. But that again depends on your mentor and the person who sold you the system. If it allows to use trailing stop, you will use it. If it doesn't allow, then don't use it. Ask your mentor or that guy who gave you the system whether you can use trailing stops. If you have not mastered your system and you don't have a tripod to base your trading at, you will lose. That is also a big truth. Losing trades will become revenge trades, doubling your losses. So let's say that you want to trade $1,000 account with one lot. This is simple truth. If you trade it with one lot and you use 30 pips stop loss, that means you're risking $300. That is 30% of a risk, and you will start your trading somewhere around here, doubt and worry. I would say this about worry. If your trade hits stop loss fastly, you will become angry and you will want to take revenge to the market. How do we take revenge? Never. We don't take any revenges. But if we do, we usually open two lot next trade to compensate for this one lot 30 pip stop loss. Usually what will happen, you will get here disappointed because the market is not giving you the chase. Maybe you will become frustrated, but overall what will happen is, you know what will happen very fast. You will become victim of the market. You will be margin called, and that is the end of your account. Again, don't go revenge trading on your account. Never, ever. Even if it feels like you can do it, don't do it. Revenge trading can also start at point 17, which will throw you even deeper into the spiral. If you are angry, that will trigger the cycle for revenge. You will open double the lot size, and then this is very close to this support, okay? To this, we call it dead stop. This is dead stop. Ultimate stop loss. Margin call. And this is margin call. If you start revenge trading after 1 month or maybe after 1 day, it's just a matter of time. You will get here very, very fast. Margin call, goodbye trading. Points 90 to 12 are magnet points for unsuccessful traders. Unsuccessful traders spend 70% of the time there, and eventually they will become another victim of the market. Points 17 and points 12. Anywhere from disappointment, from doubt to anger. And this is the typical range of unsuccessful traders. The typical range of unsuccessful traders. Because your mindset will be ranging from anger to disappointment, from disappointment to anger. That is also a big truth, because unsuccessful traders have this psychology. I have witnessed many traders fall down into the spiral of doom, even those successful ones, because they do not respect their method or they want to gamble. Spiral of doom sucks you in when you reach point 9. So when does it start? When you reach point, let's say 8, 9, boredom and pessimism. When you are too pessimistic, it will trigger a losing mindset. And it's a lot easier to fall into this spiral than to basically go up for this spiral. This is much faster than this. It's just the law of human nature. Insecurity will lead to new system search and very depressive state of mind. The depression can hurt your loved ones, and the thing is that trying to exit spiral of doom can be very painful, and very often it's impossible. You cannot break this X support now resistance. It's very hard to break it. But once you break it and you get back into these tracks, put your stops here. Don't let the spiral to suck you in again. Because if you're sucked in a multiple number of times, that will also affect your mind and your ability to think properly. Now, also one of the big reasons for dropping into spiral of doom is greed. The greed is a selfish and excessive desire for more of something, let's say money, than is needed. When we become very optimistic about our trades, That happens when we enter a trade and it moves in our favor. Usually it's easy to get carried away and expect it to move further and further, creating bigger and bigger profit. Usually that will create a fog on your perception, so you will be blind to real market conditions. Winning trades are usually turned to losing trades. Greed and fear are very strong and can have impact even on most experienced traders. Usually, the symptoms of greed, fear, are holding on to a position for too long, over-leveraging, enlarging position size, chasing the markets, revenge trading, taking trades without any fundamental or technical validity, and jumping in a position based on a feeling. You should never jump into a position based on your feeling. So learn your system, strategy, or method. It's called skill assessment. Prepare yourself mentally, psychological preparation. Now we talk about way to success. Presuming that you have, as I said, secured first two layers of Maslow hierarchy of needs, that you start trading from this point, content, hopeless optimism, having in mind that you are not euphoric when trading, then now pay attention. You are on your way to success. Let me remind you again. First thing, you need to have a tripod of successful trading: profitable strategy, risk management, psychology. Then, forget about beginner's luck. Okay? Forget about it. Then you need to have secured the first two layers of Maslow hierarchy of needs. Then you need not to be euphoric when you start to trade. Then you start trading with content, hopefulness, and optimism. That means that your risk is in control and you don't want to gamble. If you trade with $1,000 account, you use 0.05 to 0.1. You start trading here. If you used one lot, you would start where we said, somewhere around there. Worry, doubt, and very soon it will become anger. Okay? So, having secured all of this, and meaning that you are not greedy, okay, that you are not greedy, you are on your way to success. Now, learn your system, demonstrate it, prepare yourself mentally, psychological preparation. If you use 0.3 on 30 pip stop loss on 10,000 account, you can lose only 0.9. That's nothing. Building an account or trading the account, you need to think. That is, we come to the point of the first few minutes of the webinar. Whether you will trade the account for paying the bills or you will build an account for maybe a later investment. Think of it. Then analyze your risk. Set your risk level. But set your risk level to fit into this optimistic, hopefulness, contentment. Don't set your risk level to start trading with a doubt. Okay? Read through the calendar. Watch fundamental analysis. I won't trade FOMC. Darshan asked me whether I know that dollar will fall or jump on FOMC. We will see. We need to read through the calendar. My mindset does not allow me to trade during FOMC. And of course, keep the track records. Go to MyFX book, I don't know, keep it to yourself. Go through those statistics and see if you're successful or not. Where you make mistakes. You also need to know where you make mistakes. And when you do a proper analysis of your mistakes and successes, you will know where you stand. You need to analyze the market. And if you're a beginner, try following a pro and take some advices. I consider myself professional and I will always help you in achieving great results. All of my students, which of course they need to, and of course they pay for some of my mentoring and tutoring, they are very content because I have taught them to trade properly, with good money management, with a proper lot size, with a good method. Even on these free webinars and session recaps, I'm helping you to achieve better results than you can achieve it just by trading yourself. That is why me and Admiral Markets gave you these webinars and also session recaps where I can help you, because I am one of probably few traders that trade 23, 24 pairs. Most of traders trade 2, 3, 4 pairs, up to 10, and for me, I don't make a difference between Euro Dollar and CAD Swissy, or between Cable and Euro New Zealand, or Euro CAD. All of those pairs are same to me. So basically, ask and follow a pro and take some advices. You will come to the truth eventually that you just cannot make money with trading only one pair. But if you diverse your portfolio to 10 or 20 pairs, and even if you make 10, 15 pips out of each pair, it's still enough for some 30, 40 pips per day, having in mind that you use a stop loss of 30, 35 pips, which I do. So that means that we have come to the next point, and that is checklist. Check your assessments. Do a quick review of all of these things that we've talked about. If you have a system, okay, good. This system is profitable. Do I know about money management? Yes, I know. I do. Can I use trailing stop with this strategy? Yes, I can. Do I start, when I start trading, do I start from these points or these points? Is it upward spiral or is it downward spiral? It's upward spiral. Will I trade for paying the bills, or I will trade maybe for a future investment, for compounding the account? I will trade for paying the bills. Is my psychology in accordance to a proper trading psychology? Go through these things again and check yourself, and then say, yes, it is. Did I demo trade it? Yes, I did. And so on and so on, until you are patient enough to start trading live. Because live trading is not the same as demo trading. But if you imagine that you indeed demo trade as you would go with live trading, then it's one step further. You are one step further from this initial entry placement. You will maybe be a little bit pessimistic, but still, when you start to do it live with the proper psychology, you will go from here. Okay? And the big thing also, if you're too tired, don't trade that particular day. If you don't know where the pairs will go, if you didn't do any analysis, don't trade that particular day. Always, always, always learn about present market conditions. If we don't have the opportunity to trade dollar ruble, rubля, how call it Russians, they call it rubля. I didn't have the possibility to trade it, but present market conditions are in favor of dollar, as rubля fell to historically low level. Always learn about present market conditions. Having a plan will cut your losses. It will help prevent emotions, negative emotions. And it's a great thing to help you to stick to money management. Also, always repeating that. Having a plan will set your goals and help you achieve it. And also, it will make you look professional in if you are talking with other traders, and also it will make you look professional into your own eyes. In your own eyes, you will look professional. And your mindset will also change. Okay? So guys, we are close to conclusion of the webinar. We have 2 more slides and advices. Novice traders try to be greedy when it comes to profits and scared when it comes to losses. Have a plan. Don't risk more than 3%. Try to satisfy these 2 levels of the pyramid, and when you start trading, start to satisfy 3 levels of the pyramid. 4th and 5th will come in due time. Remember, Forex is a fast-paced marathon, and you are the long-distance runner. Forex trading psychology is the line balancing need, greed, success, failure, upward spiral, and downward spiral. In between, there is your psychology. It's up to you, guys. It's up to you. Everything is up to you. It's not up to the market or your broker. Of course, having in mind that you are, of course, trade with other markets with honest brokers. It's up to you. Understand the market. Reduce lot size. Set a stop loss. Be realistic and make pips, not money. Try to make pips, not money. Okay? It's easy to do. If you start with $10,000 account, then go with 0.1. It will be easier for you to make pips, not money. For starters, at least. Also, following this webinar, you will have also bigger knowledge of yourself. I'm sure about it. When you start to trade, your mindset needs to be in the 0.7 plus. Don't forget about this. Your mindset needs to be at this support: contentment, hopefulness, optimism. Okay, next, when you open a trade, you will have positive expectation belief. If you start trading here from doubt, your next few minutes will be worry and blame, because you are in downward spiral. You're not in upward spiral. Okay? Whenever you feel bad and under the weather, don't trade. Trading needs to become your passion. Trading needs to become your passion. And this passion is also reflected here. When it becomes passion and you have fulfilled all the rules we have said, eventually it will become joy. And every single trade which you started from here, if you execute it right way, it will be a joy. Even if you lose, you will be hopeful, but you won't be worried, discouraged, angry, revenge. You don't want to revenge trade. You won't hate. You won't be jealous. You won't be insecure. And ultimately, you will never be a victim. So guys, this is a presentation which I prepared for you. If you have anything to ask, go ahead and ask. I will use this time to tell you about, of course, as always, spiders then. But as always, let me find it for you. As always, Traders Blog, Admiral Markets, daily analysis, updated each day. Each day, whenever I find setups on all of those 23, 24 pairs I trade, I will post it here. Each Monday, we go to session recap and sign in. Also, sign in for this only for live accounts. MetaTrader 4, build 610 overview, because I know that many traders do have problems with this build. I will explain everything, and I will show how to use MACD 2-line custom indicator. I will fully explain it. Also, This indicator should be a standard part of your MetaTrader platform. Next weekly Forex recap is due to 24th of March. Sign in. And again, guys, I'm very glad that you have made pips. 130 pips out of dollar CAD. Really well done. What can I say? Thank you for your comments. If you don't have any further questions, we can 176 pips at this moment. This is really, how can I say it? You can see it here. 176 pips. Excellent result. I don't know what to say. Well, it exceeded my expectations, but my advice is to use trailing stop, because FOMC will start very, very soon and you may lose half of it. So secure those profits. Don't be greedy. We talked about it. Okay? So guys, thank you very much for attending the webinar. I will talk to you very, very soon. Thanks for comments. Ravi Mutu, Darshal, Law, everyone. I will be with you very, very soon, and we will have many good setups. And try to be optimistic when trading. Cheers, everyone. Bye-bye.